In this video, I'll show you how to make money and trade the 30 seconds the same way as ICT Sons is trading. This is Cameron's model, ICT Sun, and I'll give you my honest opinion about the model, show you examples, and give you a full step-by-step guide or trading plan. We're also going to add our own touch to the model to make it better. If anyone needs a one-on-one mentorship, check out the description. This is Mulham, and let's get into it. Now, first of all, what is the whole model about? What does it rely on? It's literally the same way as we've done our top-down analysis. So what did we discuss in that video? We say that we need 2 time frames to trade. Just 2 time frames, and then maybe one more just to check the order flow. So it's going to be the same thing here. What we're going to do, and this is what ICT suggested, is that we're going to use the 15 minutes, for example, to check out the order flow or the market structure. How is it going? Where is it going? And then we're going to use the 5 minutes to look for highs or lows, basically liquidity levels. And then we're going to use either the 1 minute or the 30 seconds. Those are the 2 time frames that we can actually use to enter a trade. And it's going to be a fair value gap. That's all we need right here. That's all we need. So it's literally the same way as we've done our top-down analysis video. However, instead of using the 1 minute, here we're using the 30 seconds, okay? Now, in a diagram, so if I show you this, what we need to see here is this. Price going up, for example, and keep going up, and then price takes a low since we're going up, and this is optional. I mean, you can literally trade any high and low, but for a higher probability and higher win rate, what we're going to do is we're going to focus on high probability liquidity sweeps. And how do we know that? I mean, I've been talking about this in all my videos, high probability liquidity sweeps. So if you want to have more information about that, then check out my other videos. It's basically when we have, an inducement liquidity, for example, and we have a fair value gap below, and it's with the order flow. All of those stuff in details are in my other videos. Now, we have this sweep, and I really prefer, and that's my own touch here on this video. So what we're going to do is, instead of just looking for random highs and lows on the 5 minutes, we're going to be looking at fractals highs and fractal lows, and I'm going to give you the settings for the indicator. So it's basically a fractals indicator with a period of 2. That's also. So we're going to focus on those fractal highs and lows, and I really prefer going with the order flow. So in this case, price has been going up, for example, on the 15 minutes. Now on the 5 minutes, we see this fractal low. When it's taken, immediately I'll zoom in and I'll go to the 30 seconds, even by a tick or by like 0.1 pip. Whenever the low is taken, then I'm going to switch immediately to the 30 seconds, and I want price to go up and give me a fair value gap here. When this is happening, I'll be entering from the fair value gap. Remember, I don't need a market structure shift. I don't need nothing. A fair value gap is enough in this case. Now, while using the 30 seconds, first of all, price can actually still, go up on the 30 seconds. So if I enter here in the 30 seconds, I can actually catch even a pullback on this leg right here, even a pullback to this fair value gap, or, extreme order block, or taking this high. A small pullback on the 5 minutes is a take profit on the 30 seconds. So that's one thing. Now, one other thing that I find, very nice and attractive on the 30 seconds chart, that if price really want to go lower, it's not gonna retrace most of the time. It's not gonna give you this retracement and a fair value gap. It's just gonna keep going lower and give you fair value gaps on this direction. That's what's gonna happen, right? Or at least give you a small pullback, but there is no fair value gap. So I've noticed this a lot, especially if you know what high or low to look for a liquidity sweep. But I've tried this and it makes a lot of sense. So I'd really recommend, doing this. However, you can actually do it with a 1 minute. If you don't want to do it on the 30 seconds, you can do it with a 1 minute. You'll be missing some trades, obviously, but still, it's going to be, I would say as good as the 30 seconds. ICT gives some suggestions when it comes to the take profit and stop loss in the indices. However, we're going to trade it in forex, and we're going to apply, somehow give our touch here, or be creative. And you can also be creative yourself. The same way that ICT was creative to make this, you can also be creative to yourself and do the same thing. This is the reality of trading. You gotta go back this until you find your way. And this is one of the ways that ICT or his son found. Now, most of the time, when we have the fair value gap, we're gonna enter from the fair value gap. Let's say our stop loss is here. I would say target either the nearest liquidity or go with a fixed reward to risk ratio. And you can go with 2-to-1 or 2.5-to-1 or 3-to-1, whatever, based on your backtesting, you can go with any reward to risk, whatever you find good with you. But I would say stick to 2.5. And then at some point, like I would say at 2R, for example, or 1.5R, move your stop loss. And you can be flexible with this. So just see whatever fits you and whatever is good with you, then you go with it, right? But in this video, when it comes to examples, we're going to target 2.5. But if we see a very clear liquidity level or a very clear drawn liquidity, then we're going to target that one. Okay, so if you don't understand nothing at this point, then the examples is going to clear everything. So this is today's price action. If I go and so this is Wednesday, if we go to Tuesday and, for example, look at the London session, for example, so just before London session, we're gonna go and apply everything on the London session here. So it's 1:45. This is the 5-minute chart. Now this is the London session start. Now before the London session starting, and in this video I'll be acting like a beginner trader. I'll just be try to be in your shoes, and I'm not gonna apply my my experience saying that okay, we have a high probability liquidity sweep here or low probability liquidity sweep. This is something we can do in the next video and how to improve this. But in today's video, we're gonna look for all liquidity levels and we're gonna see how price react to those levels. And I forgot to say this, but we're only gonna trade kill zone. So New York kill zone and London kill zone. In this example right here, what do we see? So this is a fractal low right here. And by the way, let me show you the indicator. So this is the indicator settings, period 2. That's it. You can use any fractal indicator. You have a lot of them. Now we mark this liquidity. We also have this liquidity level. And then we have this one right here. Also, we have this one. So those are the levels of liquidity that I can see now. Now, if I play one candle, we can see that price goes above this point. And I'm going to switch to 30 seconds now, just to see that at that point, did we have a fair value gap when there was the sweep? So the sweep was right here. So let me play one more. We can see that the sweep happened here. It's a nice sweep. Then play one more. Do we have a fair value gap? No. This is just a normal gap. This is not a fair value gap. Why? Because a fair value gap is a 3 candle pattern. In this case, we only have this candle and this one. So if another candle comes here, then maybe we have a fair value gap, but so far nothing. And we don't have a fair value gap. So you see how there was no entry available here. And we can see that price has been going up since then. And this is what I say. And this is what I said about the 30-second chart. If price really want to go down from here, it's going to create a fair value gap. So now going back to the 5 minutes, and let's see if price is going to go to one of those liquidity levels. I'm not trying to go and pick some, or cherry pick some examples, just look for the good examples. I'm trying to be as honest as I can. If any of you guys already have a model and it's really working very nicely, then you don't need to look at any of this, right? Stick to your model. You don't need to chase new things. This is a new model everyone is talking about, only because some people ask me to post about it. That's why I'm posting, but I don't like to, make you think that, okay, this is the new holy grail. This is the same as any other setup. If you master this, it's going to be good. If you don't master it, then it's going to be the same as others, right? So looking at this, I believe we had a sweep here at this level. So if I go back here, go to the 30 seconds, and let's see if we have any fair value gap available when price takes this. So there's no fair value gap yet. Very small fair value gap. I mean, not even no. There is, literally a small fair value gap, which I'm not gonna really consider, right? Now, very big candle. If I see a fair value gap here, I'm gonna be entering, and we do have that fair value gap. Mostly for this strategy right here, I'm gonna enter at the beginning of the fair value gap. So, just right here. And stop loss, since this is a very big fair value gap and candle, There's no fair value gap above. I'm gonna just have it above this high, just above this high. And let's target, we have this liquidity level, but this is only 1-to-1. So I mean, you can actually take, or move your stop loss after this. We go lower. This is a liquidity level, this one and this one. So this is gonna be your liquidity level, and this is 2.36. So maybe we're gonna stick with 2.36 for this one. Just have the entries slightly above this candle high. Let's see if we get an entry. There is the entry, and its price is gonna go to the take profit, and it doesn't actually. Okay, it doesn't, and then goes to stop loss. So this was very close to the take profit. Doesn't take this liquidity, but it only goes to, this was only 2R. So yeah, this was a losing trade right here. Now if we go back to 5 minutes, and we have a liquidity sweep right here for this high, at this high again, right? So again, price going up. Let's go to the 30 seconds. So going to the 30-second chart to see if after taking that high, did we have an entry? So price now taking the high, no fair value gap yet, and there is a possible fair value gap. Okay, there is one here actually. So you see, after taking this high, price goes up, give me this kind of an intermediate term low, price goes up at the same level, goes lower, and we have the fair value gap. So this is our entry, and it's inside of the kill zone, right? So we're gonna go here. This is a bearish fair value gap, and we're gonna enter from here. So just at the beginning of the fair value gap here, slightly above, and then stop loss above the high, just like this. And what do we target in this case? So we have, there's already a high resistance liquidity here. We had this sweep, so let's say 2.5 is right here. It's 2.5, so let's see if it's gonna work. And yes, it does. So this was a winning trade, very nice trade. Now we go back to 5 minutes. Let's see if we had a sweep of a fractal high or fractal low. And in this case, so I'm gonna remove this. And in this case, so we had a sweep here, and at this level, we actually, there's no sweep yet, but we have this fractal low. So I'm gonna mark this too, fractal low right here. And I'm gonna stay on the 30 seconds because the price is too close to this liquidity level. So if price takes this liquidity level, I'm gonna be entering. If not, I'm just gonna wait for the other levels to be taken. So we have this liquidity level, this one, and also this one. So price takes this liquidity level, no fair value gap, nothing, takes this one, doesn't take this one. So now price took two liquidity levels, this one and this one. If I see a fair value gap from here, I'm gonna be entering, and looks like price is going lower. But okay, this is a very big wick, and price now is starting to go up, and we have, yeah, we do have a fair value gap here on the 30 seconds. So this candle and this candle, we have a gap between them. This is a bullish fair value gap, right? The bullish fair value gap, we can actually find an entry. Let's keep it here because this is now a big fair value gap. Stop loss, I'm not gonna put it all the way down here. It just a lot for me, and I believe that there is no need for price to come lower. So I'm gonna just put it like 50% of the wick, and then target 2.5, and 2.5 aligns with this. But this is for me, and I do believe that price is gonna take this high inside of this fair value gap and maybe go up more. So I'm gonna go 2.8, or if you guys want to have 2.5, then you can fix RR. So we get the entry here, and price shoots up. You see, that was a very huge trade. If you wanted to let it run, but 2.5R in, I would say, a couple of minutes, right? Now we go back to 5 minutes again, and we can see that we had a sweep here. So 5 minutes, we had a sweep. So 5 minute sweep is also a 30-second sweep of this high. This was the high. This was a fractal high on the 5 minutes. We see price sweeping, price coming lower now. No fair value gap yet. And then there is a fair value gap here. Usually I'm not gonna enter from this. Why? Because it's just too low, right? It's just too low to the range. So mostly I would like price to go a little bit up to the above the 50% of this range right here. But if you follow the plan, it's going to be somewhere in here. When I have a big fair value gap, I'm going to have the stop loss, slightly above the candle of the fair value gap. And then let's target 2.5 in this case, and it's lower than this liquidity level. So I'm just curious to see what's going to happen. And we get filled here. And price goes to the entry again and then take profit. So that was also a very nice trade. You see how a lot of time when price takes a liquidity level, for example, I would say this liquidity level, takes it, doesn't respect it, we don't have a bearish fair value gap. That's why we always say on the top-down analysis video, when we are looking for a bearish trade, for example, what I want to see first is for the higher time frame to take a liquidity level. So let's say 5 minutes in this case, take a liquidity level, then I'm going to be only considering bearish fair value gaps in this case. Just bearish fair value gap. Why? Because we are in a sell program, and now every bearish fair value gap is acting as a resistance. And the opposite is also true. When price takes a low on the 5 minutes and then started to go up, if I go to the lower time frame and I see bullish fair value gaps, that's where I should enter from. Only bullish fair value gaps. I'm gonna ignore any bearish fair value gap in that case. Why? Only because of the 5 minute sweep. So after we looked at this lender session right here, if we just go to the left and let's say, so this is the lender session, let's try New York for now. So I'm gonna go just before New York starts like this, and let's take a look at the price action right here on the 5 minutes. So what do we see here? What are the liquidity levels? I mean, right now I can see that price respecting this fair value gap. Lender was going lower, big retracement. Price can actually go lower now, maybe until this fair value gap and keep going up. That's a potential scenario. But all of what we are looking at now is this liquidity levels on the other side. So what are some of the liquidity levels here? Now we can see that price takes this high and goes lower. This is a liquidity level. This is also a liquidity level. Fractal high, fractal low here, also fractal low here. But there is this one that has a fair value gap below. So instead of this one, I'm going to take this one. And we also have this low right here. So those are the liquidity levels that are close to the current price action, right? 2 more candles and we're going to have the lender session open. So now let's switch to the 30 seconds and we have those lines, the black lines, those are liquidity levels. If I see at any time a 30 seconds fair value gap creating after price taking the liquidity, I'm going to enter from targeting 2.5. Now the New York starts, price takes this liquidity level, goes lower. There is nothing, there is looks like a big candle and then a fair value gap. So we have a fair value gap here. Let me put it here. This is a fair value gap, very big one. Let's say I enter, so at the high of the fair value gap, just slightly below, and then because this is a very big candle, then stop loss is going to be just below the low of the fair value gap candle, and then I'm going to target 2.5. Now you can always move your stop loss, for example, at 1.5 R, for example. So at this level, maybe you can move your stop loss to break even if you want to. But for this video, we're just going to focus on 2.5 or lows. That's it. So price comes to the fair value gap, was too close to the stop loss, doesn't go to the stop loss, and it goes to the stop loss now. So this was a losing trade. However, did it give me at least 1.5 R? Not really. It was too close. So this is a losing trade anyway. Even if you move your stop loss to break even, you will not be able to. Now going back to the 5 minutes again. So there was one fractal low that I did not mark here, but we can always go back to it. So we go here to this fractal low because it happened while I was trading the other one. So most likely you will not be able to trade this. Now what do we see here? Price take the liquidity level. Does it give me a fair value gap? There is this fair value gap, but it only reacts from here, and this is the losing trade actually. So this is the losing trade. If you traded this, now after experience, you would know which one to take and which one not to take. So you can see this is a big fair value gap. but the next candle give a reaction from this order block. So this is a red flag for you. Now let's consider this as a losing trade, because losing is part of the game. Now we go back to 5 minutes. Let's see if we have a sweep of any type of liquidity, and price goes lower to this level, right, the one that we marked. So we go to the 30 seconds. Let's see what's happened there. And what do we see here? So there is a fair value gap. There are two fair value gaps actually. This one, very small one, and the big one. Most of the time I'm gonna be entering from the big one, because this is a very small one. I don't feel it's a good place to enter a trade from. So most likely price will react from here, maybe right here, but mostly it's gonna react from here. So I'm gonna have entry like this, stop loss below this low of the candle, and then I'm gonna target, so let's do 2.5 right here. You know, I feel like this high and this high are relative equal highs, so maybe I can target those, right, just like this. So let's see, price actually, okay, maybe coming down, keeps going up. So if price takes this high and this one and then started to come back, then I'm not gonna be holding this trade no more. Okay, so it's still not taking that high, not even this one, not even this one, right? So okay, not even this one. It created now triple highs, so that's a good thing. Now let's see how price comes. So come in here, hopefully a reaction. Okay, now we're starting to go up, and there you go. So that was a winning trade, but it was kind of scary. But you see how if this level of liquidity was taken, then I'm not gonna, you know, keep the trade on. I'm just gonna remove it, right? So this is a winning trade. Now back to 15 minutes. Gonna be waiting for this low or those highs to be taken, right? So let's see. Actually, price, okay, price takes this low. So we have the sweep here, just like this, and then price going up. So nice rejection from the liquidity level, and no fair value gap yet. And there is a fair value gap here. There is one here, fair value gap, bullish fair value gap. So we can actually enter from here. Stop loss, I can put it below this low, but this is, you know, kind of risky. I'll just put it below the low of this candle and then target 2.5. Let's see if we get, now this is a nice target right here, and I feel it's gonna be hit. So 2.5, slightly above this, I would take it. I would take it. So price not the best entry right here. Price go, okay, go down, and then almost a take profit, and somehow take the stop loss. So this was, you know, it was very close. This is a break-even trade because 1.5 is achieved here, and price goes all the way to 2.2 but not 2.5. Now back to 5 minutes. What do we see here? If you wanted to take another entry, we have this fractal low taken right here, and if we go to the, so this is the fractal low, the same, almost at the same level as the other one. Back to 30 seconds, and price taking the level of the liquidity. See, so nice reaction, still the same one as this one, the same rejection. So no fair value gap yet. Actually, there is a fair value gap here, from here to here. Nice fair value gap. You can enter from this one, it's right here. Stop loss, I would put it not all the way here, but no, slightly below this low, and we're gonna target 2.5, and we can see 2.5 align, and we can see 2.5 aligns with this and also this high, which I knew was going to be taken, but it did not happen here. So should be a good trade. Okay, why it's not hitting the take profit, I'm not sure. Still not. Now it does hit the take profit. So that's the way. Sometime we're gonna have losing trades, and that's only by just trading fractals highs and lows without doing any more thinking, right? But if you go and watch my other videos and apply all of the things that I always mention about high probability liquidity sweeps and the other stuff, you would be having a higher win rate. Now, at the end of this video, this is not the holy grail. This is not the best setup in the world. When the silver bullet was out, a lot of people thought that, oh, it's the holy grail. Only the people who put the effort, backtest it, try to improve it, try to tweak it a little bit, those are the only people who were successful with the silver bullet. All other people are still switching between a strategy to another, and those people will not get nowhere. So if you already have a setup and it's working with you, I suggest that you can just stay with it, right? Otherwise, you can check this one, backtest it, see if it works with you. If it does, then go ahead and make money from it. Try to improve it. Try to backtest it. That's the only way you become successful. Hopefully you guys like this video. Make sure to hit the like button, leave a comment, subscribe to the channel, and join the Discord. It's totally free. I post a lot of educational stuff there. We do live seminars. This is Molham, and I'll see you next video.